Hello everyone, I hope that you guys had a wonderful trading week thus far. Today kickstarts the, beginning of your future, right? We will be discussing the essentials to understanding price action, right? You need to understand that this is a basic lecture, right? It will not be drawn out, to save you sanity, but we'll be touching on everything that you need to understand. And after this lecture, I'm pretty sure that most of you will be better than 90% of the herd. So here, I'm pretty sure that you guys have been introduced to the economic calendar. I'm not sure if you have learned that the high and low of the week usually forms on days that have high impact news events, right? So just based off of the information that's here, looking at the chart right now, right? And you'll hear me repeating this week after week, because it is something that's important for you to understand, right? Just based off of, looking at the chart, seeing the red folders, you can, have an idea of when to expect a major reversal, right? When using the economic calendar, be sure to, be focused on the USD high impact news events than anything else, right? This is all that you need right now is the USD high impact news events, right? It's pretty easy to, get this on your display. You just go here, you click here, you click USD, apply a filter, and then, everything will pop up on your screen. Right here, right? This is, something that we call, around here, it's a triad. Right, so now looking at the screen, we have the Forex market triad. This is something that will be very important to you going forward and throughout the entirety of your career, whether it is that you want to be an analyst or whether it is that you want to be a trader, or, you could do both if that's something that you wish. There is something here that some of you may be able to see that occurred before a reversal. What is it? Right? What is it? It's a cracking correlation. Right? Cracking correlations, well, the major cracking correlations occur whenever price trades above a high or whenever price trades below a low. Right? Around these parts, we call it SMT. We have different types of SMT, which we'll be touching on in future lectures. But for now, this is the main thing that you will be focused on, right? You won't be focused on gaps that much right now, right? You won't be focused on order blocks or anything else. It's literally just this, right? Here you have price failed to break below this low, right here. And let me go and show you guys the corresponding candles for each asset. So this candle right here, which was formed on Monday, right, 3rd of July 2023, you can see that within the price action that occurred within the US dollar, price failed to break below this low. Right? Within the price action of the euro, price failed to break below this high. But within the price action of the Great British Pound, we had price trade above this high, and this is where we had a cracking correlation occur. The higher the time frame, right? The higher the time frame that you have the cracking correlation, the higher the magnitude of the move, right? So we have spoken about this, right? In the 2024 mentorship, all of this move that you see occurring right here, and it was simply based off of the fact that we had a cracking correlation, right? Price traded above this high in the British pound. Price failed to trade above this high within the euro, right? To make it easier to be seen, right here, you can see price failed to trade below this low. Someone said that cannot see the mouse. How? Really? You can't see the mouse? Oh. That's something that I did not expect. Okay. Don't worry, we'll get down to it. So we need to share the screen and not the window. You guys can see the drawing though, right? Okay, for now we'll just use the crosshair. I think it's better to use anyways, right? And here for the euro, you can see that the same thing occurred, which happened within the dollar, right? It's very important to understand that the euro is basically a reflection, or a mirrored image of the US dollar. Here within the Great British Pound, you can see that price clearly traded above this high, right? So the most important things, right? Well, one of the most important things which should be a part of your setup will be, revolving around this cracking correlation right here, right? And here now, right, you guys can see that, right, this is current price action, where we have the euro, not the euro, the S&P 500 going higher, and we can expect it to go higher, right? And whenever I say things like that, don't just take it as a grain of salt, right? Because I am not going to say something that I, don't expect to happen, right? If I say expect this to go higher, then it's pretty clear. Okay, we're bullish now, right? Well, I am bullish. Pretty clear, right? And here you can see the Nasdaq. We can expect that to go higher as well, and the Dow. Now, what is the underlying concept which pushes us to understand that we can that price might go higher or price might reverse, right? What is it? You can see it right here. It's pretty clear, right? S&P 500. And remember, when you're using this concept, you need to have the triads in front of you, the triads for the futures market, or as follows: the S&P 500, the Nasdaq, and the Dow, right? As long as one of them falls out of sync, then you can expect a reversal, right? As long as one of them falls out of sync, you can expect a reversal. So here for the S&P 500, price failed to trade below this low. Then what happened afterwards? It continued higher, and we can expect it to get to these highs, right? As long as we see a lower time frame cracking correlation occur here, Do you understand what I just said? Right? If not, just rewatch the video and we will, expound upon this topic furthermore. Here, the same thing occurred as which occurred here within the S&P 500. Price failed to break below this low. But within the Dow, what happened? We had price, clearly break below the corresponding low right here. And this is what created a cracking correlation. This is what activated the actual liquidity in the marketplace, right? So people usually say liquidity rests below highs and lows. Liquidity just, is everywhere. In my opinion, that's not the case, right? We do not, treat a low as liquidity unless it is ready to have price, reversed. So just here, liquidity is created whenever, things like this happen. Whenever there's a cracking correlation, that's when we really have a liquidity below a low and liquidity above a high. Now we'll go a bit deeper into, price action, right? So you guys can see which is marked as catalyst, right? That is the low that was left, right, by the SMT, which we were, referring to in the previous slide. Right, so price traded below this low, but failed to trade below this higher time frame low, which created what? A crack in correlation, right? Between this low right here and this low, it's a cause for concern. So as long as price trades below this low right here, but fails to break below this one, then what can you expect? Higher prices. Another thing to pay attention to is after you have something like this happen, right? You have higher time from SMT right here. The only thing that you need to wait for is what? A lower time from SMT, or another cracking correlation, which we will talk about very soon. And another thing of concern are these highs right here, right? Right, so whenever you see highs like this that are not, smooth highs, right? These are not relatively equal highs. These are not equal highs. They're diagonal highs, right? This is trend line liquidity right here. So as long as we get a high impact news event, which forces price to crack, so we'll get a cracking correlation between the assets of the triad, then yes, we can expect, higher prices. So yes, that's the main thing for you to understand. That's the main thing for you to study. If you're brand new, what should you be studying, right? You should just be looking at the triads right now. So the S&P 500, the NASDAQ, the Dow, looking at the euro and comparing it with the British pound and the US dollar. Look at, whenever you see price reverse. And most times, right, you'll see a cracking correlation. It's always there. Every year, every month, every week, every day, every hour, every minute, every second, there's a cracking correlation, right? Every time that, you see price printing and you see it reverse, there was SMT, right? Another thing to note is that 70% of the times when you have and these are things that you should be writing down right now, right? 70% of times when you see the high and the low week, the high or the low of the week form, right? There is always a Kraken correlation. There's always SMT. The same thing occurs for the sessions of the day and the 90-minute cycles and so on. Right? So, you need to go into your charts. What should you be doing? Locating the reversals of price action whenever price traded below a low. Look at, what's their SMT? This will train your reticular activating system, right? That's what it will do. There will become a time when you won't have to mark your charts anymore. There will become a time when you won't even need more than 2 assets to compare, with another 2. And you just see the reversals as they come. And here you can see we have the S&P 500, right? So we had price trade below this low. The catalyst, occurred when price failed to break below this low. Whenever we had this swing low form, price failed to break below this low. While, within the Dow, we had price breaking below its particular low, which matches the timestamp of this low right here. After this occurred, price traded back above this low here and continued to trade higher. Pay attention to the time that the low of the week was formed. Right? Pay attention to the time when we have this price action, trade within this gap, and pay attention to the time that we had the expansion. Right? Whenever you have a Monday, right? You have a Monday and it expands. What should you expect? What happens after a Monday expands, right? You can expect price to pull back within the range of that Monday's price action. But when should it pull back within that Monday's price action? That should occur on a day that has a high impact news event. At the highs around 6,200, near 6,200, 6,180. For there's the S&P 500. We can see that we have relatively equal highs. We can expect price to be drawn to those highs, right? As long as we do not have a bearish crack in correlation. So now, you guys need to go into your charts and dig. This is how you'll learn, right? This is how you will get acquainted to reading price action, and this is how you will get better. I can assure you, right? I can assure you that if you don't do this, you will not learn anything. I'm 100% sure, right? If you don't follow everything that I'm telling you, you will not learn. You cannot just watch the video once either, right? You must watch it more than once, right? You must make notes, right? There are things that are said just for you to understand, right? Even though, right, you've just gotten a few videos so far, each video is a prerequisite, right? So if you skip one, you'll be in trouble. You seriously need to, pay attention. You cannot just come here and think that, it's going to be so easy. I'm just going to watch a video once. I'm not going to get it. No, that's not how it's going to go. So yes, you guys will realize something, during the course of this month, right? Price action will not be the best. And, that's a given for every year. The worst months of the year to trade are when? January and December, right? That's when you will have the worst price action. As we go into February, and I'm not saying that the price is untradeable. Of course it is. If you like to, you can, right? But as you go into February, March, April, then, price action will become so much clearer and so much easier for you to read. So yes, I hope that you guys found this useful. Right, we will be back here next week at the same time, and you have upcoming lectures, I believe, from the members of staff that are here. Right, we have Lawson, we have Medic, and we also have Jacob. Right, they're very proficient in regards to quarter theory, very knowledgeable, right? Some of my top students. So if you have any questions, they'll be here to answer your questions. And remember, it is not a sprint, right? It's a marathon, right? You need to survive within this industry. And you can't be chasing after this thing too fast, right? You got to take your time to learn this, because it's not something that's easy to learn, and it's very hard for me to teach it, right? With that being said, good luck and good trading.